All right, hey guys, Sam with you here. It's we're mid-morning on what are we? January 16th, Tuesday, January 16th, and it seemed like a good day to get an update on Bitcoin and what we're seeing here. Clearly, volatility's back in the market, and this is a good time to maybe review your analysis and see if maybe there's an alternate count that needs to be considered, so that you have roadmaps for potential outcomes here that won't surprise you. And it's as we always do, it's simply a process of analyzing the market, looking for patterns that we know repeat historically, that are going to take advantage of human emotion, fear and greed. So market's selling off, so thus fear is the dominant emotion today. At some point, likely we will reach a point where greed overcomes fear, and we'll find a low, and perhaps we'll start to move higher again. But we don't want to be, absolutist about anything and just dogmatic in our view of where the market is going. We want to just let price show us and look for those high probability zones where we can enter the market on a premise that we think we have a account that is solid, or some technical confluence that would support that decision. And then enter it with a clear idea of what the risk and what the potential reward is. Money management is paramount here, particularly on days like this. This is where, people, the long-term hodlers are, get challenged today, right? So it's, when the market's just continually going up, holders get rewarded. When the market is volatile and selling off, then, perhaps that's where technicians are going to come in and, maybe, if nothing else, offer you another way to consider approaching the market. So one of the things that I think is a good idea to do when you see the market reacting like this, and perhaps blowing through some of your counts that you had set up that you were anticipating. So if those get invalidated, then you have to try and pull all of your bias off of the market. So if you had a count that you were leaning on, and now with this price action here, it's been invalidated, first thing to do that I will do myself, and I encourage technicians to do as well, is just pull off all of your labeling here based on what we're seeing with this. So just strip it as bare as you can. Now, I'm not going to go back to 2009, but I've got, this is the daily chart of Bitcoin to the dollar on Bitstamp, where I've been using this as a reference. Happens to be where I trade it, but I've just got this up here on the daily to try and get some perspective. Okay, where are we? What could be happening? Is there anything unusual here that should surprise us? So I'm going to just pull this over here so we can get a look at this. Now, you got to remember that. So here, I think we go all the way back to 2012 here on Bitstamp. So this, when you start to open it up here and you see, this was likely our one wave here, and then we had the long sell. But I don't need to take you through all of this, but just to remember, how far we've come in how short a period of time. So just the basic count here, as I've got it here, and I open this up here. So here, this low here, this what I'm proposing is our fourth here. That's July 16th of 2017. Right, and that's a low at 1829. Just to give you some perspective on how far we went in how quickly we did it. So you want to try and get some perspective on this. So the fact that the market is selling off, it really shouldn't be too terribly surprising, right? So we all like to see it keep going, but corrections are inevitable. They're ultimately they're essential for the market to continue to move higher. This shakes out weak hands, people that are over leveraged, people that were just buying it for all the wrong reasons. So that's where greed and FOMO and all of that is reflected in the market, where you just go parabolic, as we have, and we do it in such a short period of time. So it's not so much about today's news or crackdowns from governments in Asia. All of that. Listen, as I was having this conversation with a member just the other day, the technician's first assumption, your very first assumption, is that all of the known fundamentals, all of the news, all of the tweets, all of the government crackdowns, all of anything that can be known at any moment in time is reflected in the price. That's your first assumption. So, you could, there's two ways to look at that. So a fundamental analyst will look at that and say, oh, well, that's just a technician being lazy because they don't know how to or are not interested in doing the fundamental work to understand the project behind it. And that's a valid argument. As a technician for 20 plus years, I would tell you that so price is truth, right? So no matter what your fundamental analysis is, the reality is, where is the market being valued at this moment in time? And it's hard to argue with the idea that everything that can be known is reflected in that valuation of price at that moment in time. So when we look here to Bitcoin and look at what it's doing now, and you think you're scouring through the Twitter sphere or whatever media source that you use, or you're watching Bloomberg or CNBC or whatever you're doing to try and understand why the market's selling off. That's certainly curiosity, right? So what's going on today to cause all of this selling? I'm not suggesting that you turn a blind eye to that. There are some purist technicians that tell you to never watch the news, never read media, just look at the price. Everything you need to know is shown there. And I'm probably 80% of that thinking, but I would tell you that what we're seeing here now is really not out of the ordinary. It shouldn't be shocking anyone. And it's if you've been doing this for a long enough period of time, this is pretty standard here. Now, that doesn't mean that listen, I got stopped out this morning on multiple positions that I was in, that I was long. And nobody likes it, but this is where money management, risk control, preservation of capital, all of those things are paramount, and this is when you get reminded of that. So, all right, enough of that. So let's look at where we are here. So this going back here, and again, as I will often tell you, the reason to go back and confirm your analysis, in this case it would be a wave count, is to confirm and validate the pivots that we're going to draw from. Right? Without doing that, it's, how do you pick? So here, I propose to you that this is a fairly reasonable count here to have going up into this high here, which is August. Sorry, I'm trying to get it right on there. August 31st. Okay, so that's our high where we hit 49.77 on Bitstamp. So you can make a reasonable outline here to say, okay, well, that is a clear, clean 5-wave structure, right? So here's our 1, 2, up big 3. We come down for the 4. We don't overlap the 1, and then we get a very clear, clean 5-wave. If I open this up, very clean 5-wave structure here to complete the 5th. Okay, so if we operate on the assumption that this is a 5-wave structure that is completed, what we're saying is that that's our 1 wave. That's a completed 5-wave structure, and then we come down and we retrace it. Now we can go back and check some of that. We don't have to. I mean, this was one of the great buys of 2017. We went right to the structural support, right to the Vegas wave, and just to remind you here, from this low here to this high, that was right to the 618, right to the golden zone. But now, so you look at that and you go, okay, that's cool, but wait a minute. If you're saying that's a completed 5-wave structure, we've got to draw from the beginning of that. So just to remind you, all I did here was wick off the lowest low that I could get, which I think is $3.41. So I'm just wicking that off and drawing the line, so I don't have to keep going back left. I can just use that as I draw from. So if we operate on the assumption that we have a completed 5-wave sequence, we're looking for a retracement of the entire move, not just this pivot low to this pivot high, even though that was technical. I mean, perfection. It doesn't get any better than that. Right into the Vegas wave, right at the structure, right at the 618 golden zone. But we have to put that in an Elliott context. Well, you don't have to, but I would propose to you that there's value in putting that in an Elliott context, because now we're drawing from the absolute low here to this is our wave 1 high. Right, so we look there. Now it takes on, maybe a different meaning here. So this is kind of the challenge of this count. Now, it's not unheard of that a wave 2, so if this is the 1, this is our 2. It's not unheard of that a wave 2 goes to the 38, doesn't make the 50 in a very strong market like obviously Bitcoin. It's not unheard of. It's low percentage. It's 12% statistically speaking of wave 2s retrace just to the 38. So you're in low percentage here, but nothing about Bitcoin it should be terribly surprising. I mean in a raging bull like that doesn't shock me that we only get to the 38 too. And there's a couple of different ways to count that. Here's an alternate count that I had for a while, which I have relabeled. This was an alternate count, that this was the 1. But notice here what happens here. If that's our 1, okay, that's how I initially had it counted. I've relabeled to accommodate what I see now. But look here. So when I draw from the low here to that is our wave 1 high, we still are just go to the 38.2. So no matter how you label this, and I do think the count is structurally, it's better here. This just barely makes 100% the length of 1. So I think this is a better count as I look at it here. So same thing, same problem. It's not problem, just observation that we only make the 38 on the wave 2. So let's just, there's no other way to count that from an Elliott perspective that would make sense. But I think this is a cleaner count because of the beautiful 5-wave structure that we get here. So if we now let's move this aside and operate on the assumption here that this is going to be our wave 1, which I proposed to you that there's a high probability that's what we have, and that makes sense. So now we got to bring the rest of this into context. Okay, so now we look at it here and we go, okay, well if that's a wave 1, then I don't need to go all the way back to the beginning here, but that would be 1. This would be 2. Well, clearly this is our 3, and we're in some sort of a retracement here for a 4. We don't know exactly where that's going to stop, but that would imply higher prices eventually once we get through this correction, that we've got higher prices in store. And that in turn, right, for the Bitcoin to 1 million or 100,000 or however bullish you are, for those fans, that could very well be just a 1 wave. If we're going up to some of the the outrageous projections that you hear for Bitcoin, this would likely just be the 1 wave of the next degree, right? At 20,000, retrace 50, and then up we go, and who knows how high it can go. So let's look at this and go, okay, well, forget that it's Bitcoin. It's just a chart. It's just a chart, and we're putting an Elliott wave count on it to try and get a handle on where we are. Okay, so if that's a 1, then this is my 2. Okay, simple enough. What am I going to do now? I'm just going to draw from my 2 low, here if I can get it right on it, to my 3 high. And what do we got there? Well, now that's a double bottom we've hit. Now I don't know that this is the absolute low. That's kind of interesting to me. That right. So if you take the all the bias and the emotion and the however you're influenced by what's happened in Bitcoin and cryptocurrency, and you just say it's just a chart. I don't care what it is. It's just a chart. So what have I got there? I've just done a 50% retracement, and I've checked it twice. I've got a double bottom. Now that doesn't mean it couldn't keep going. We could easily go to the 618. We're in lower probability because remember the high probability zone for a 4th wave is right here between the 38 and the 50. Now we've gone through a little bit here, at least on Bitstamp, right? It's going to vary from exchange to exchange. We've gone through a little bit, but we seem to be checking that low. Now, it's not terribly surprising that we're getting through it a bit. That very likely could well be just some stop running for people that were, you can see here we had this structural support here on this pivot here. When I open this up, you'll see it that you've got a little stop running there, or I mean, we know, right? So if you watch my videos, you know that very likely we've got algo buying here at the 50. That may well be. So we had the first set of buying. They don't get their target. It's come back down. So algorithms kick in and more buying is here at the 50. And they'll continue to buy it and support it all the way down to the 65. Yeah, so does this hold? Well, we don't know. We don't know. But the fact that we've made a 50% retracement and we've put it in a double bottom here is that shocking anyone? It shouldn't really. I mean, that's pretty standard fare for technical trading. I mean, it's just, whether you want to, it's whether you want to think about it in terms of, the magic of Fibonacci numbers and how they affect the market. By the way, 50 is not a Fibonacci number, as many of you probably know, but it just happens to be, maybe it's just a lot of people will hypothesize that it's just, it's where people feel, well, okay, if we've, given back half of it, that's a reasonable place for the retracement to end. Probably safe to be in here buying it again. If we go to 618, that has, all sorts of, how you want to think about it or not, whether there's, magical, mystical properties at the golden ratio. It depends how you want to think about it. Here's what I think about it. I know that algorithms are going to buy it at the 50, and they're going to keep buying it all the way down till we get to the other side of the 65. So this reaction that we're getting here is it's not terribly surprising. Now, if we get through that, then we got to start doing some projecting and see, well, if we're heading here, do we don't invalidate our long-term count. Right? I mean, so a double bottom here, if that were the low, wouldn't surprise me if it went to the 618. Well, here's the Vegas wave right there. So we've got, potentially more downside here, which I'm not rooting for that, but, it wouldn't shock me. Right? Again, forget that it's Bitcoin. It's just a chart. So could we retrace? Well, we did it repeatedly back here. This was perfectly in the box. So we could easily see something like that come right back into the golden zone. This depends on, this would be something to pay attention. If we're going to break this, we might do it. We might break this while I'm recording this video. If we're going to break this low and head lower, here would be the next spot you'd be looking for. So, again, this would be really interesting to see if this double bottom holds. Right, very, very interesting. So we know there's, I promise you there's algorithmic buying there at the 50. So we'll see if that holds or if we're going to keep coming down here. But it's kind of interesting to see. So let's open it up now. Say, okay, maybe that's the 4. So where are we going in the 5? Well, algos are going to have their target up here. That's 23,603. That would be pretty, standard fare for just a straight algo pull. Just happens to be off the daily. So that would be, so if you're front running the 50, as algorithms are going to do it, 11.6 to 23.6. I promise you they're buying in there. So we'll see if that holds. It's going to be interesting to see. So now, listen, once you get a handle on where you are, right, then it becomes a question of looking for your entry because, you're buying at the 50 and putting a stop on the other side of the 65. That's a pretty meaty, drawdown to take. So I'm not suggesting that. I'm not going to be doing that. I'm looking for ways to get in here on the assumption that if this starts to hold and we see the market start to move away from this with conviction, can I get a 5-wave structure out of that to imply that potentially what I'm going to look at here is a 5-wave structure to start taking me up to my target up here? And I'm not going to do it. I'm not going to go straight up. So there's going to be subdivision along the way. All right, so we're looking for that opportunity where we can get in on a much smaller time frame, so with decent risk reward. But not a bad idea to step back to the daily and go, well, what's my target? If I'm trying to weave my way in here around the algos, and my target is up here at 23,000, what kind of risk reward can I set up for myself? All right, pretty juicy, right? So even if you just just for the exercise of it, if you bought it right here. Okay, now if you're on the other side of the 65, and maybe you do it in small enough size, that's 4 to 1. If I get it right on there, 3.97 to 1. Nothing wrong with that, right? I mean that's a lot of money, but do you want to give it that much risk, or do you want to tighten way up, and say, hey, I'm only going to give it a little bit there. Now we got 13.8 to 1. That's trader's choice, and what you can afford to do. But the other alternative is to wait. Let's get some sign that we have a bottom in here. Let's get the first move off of that low, and then we wait for the first retracement, right? And then we're looking for the third to come in. We don't really need that. Oh, I'm glad I wanted to show you this. I'm glad that came up. So here's the RSI. Getting oversold on the RSI is, look at the last time we were here. What happened there? That was the last time. So we had it here on the 4, right? So you see it here. Here we had it where you can see the green stripe. Where we had the 2 here. Look what happened there, right? So we're still not there yet. So that may get your attention there. In that, if we're going to come down to the 618, likely that would be a juicy entry because now we're in oversold on the daily. Right? That doesn't happen very often, right? So the last 2 times that happened, you were paid well for buying there, but it's hard to do that because that means the market's coming straight down. So that's where having these technical entry points, worth considering. Now I'm looking at it on the daily, right? So this is the temptation to go to a shorter time frame and say, oh, well, it did it here. Yeah, look how deep that went. So we're kind of close on the 12-minute. Then you can kind of talk yourself into this. So you got to pick a time frame and work from it and go, ooh, okay, now I'm down to the 8-hour. Ooh, I'm getting pretty close here. So again, when did we last see it on the 8-hour? Well, that paid pretty well. How about here? Well, that paid pretty well, but I bought that and I just got stopped out today. So, right? I mean, so it doesn't necessarily mean that's to the individual trader. Now I got stopped out at break even, and I had some losers in here trying to buy it because the count implied that we had higher prices to come. Yeah, it doesn't happen, right? So. That was a little sad, but it happens, right? Stops are part of it. So, just be careful, right? So if you say, okay, I'm going to wait for the daily to get in the oversold zone on the RSI, don't, go to the 8-hour and say, well, it's there now. I'm going to jump in early. Commit to a time frame and make that the time frame that you're trading from. So we can see here, I mean, this, again, just, simple Elliott oscillator here. This is just the histogram showing you the strength here. Hard to argue with that as the third wave. So here we're putting in our fourth. Well, interestingly, now take note, I'm on the 8-hour here. So if I look at that, I can kind of talk myself into this. All right, we got divergence there, but we've got this double bottom here. So don't have it. So does that mean we're putting in a bottom? Possibly. Be careful though. Be careful because this, that could be interesting. That's right below. So those are worth checking. That's where I go last, not first. If the safe play, right? If you are trying to be conservative, look for that first little pop, and you want to see it in a 5-wave structure. So you might do that off the hourly. Look for that first retracement, and maybe you buy the 50 there. Now look at that. So that sets you up there. So you're buying the 50. Now you can put your stop on the other side of these pivots, and so you can get really, really tight. There. Okay, now what do you have? Now you have 15 to 1. All right? You don't have to pick, you don't have to buy the falling knife. You can let it stabilize. Get, whatever is going on today, more sellers than buyers, right? So whatever that is, right? Let that play itself out. Maybe we're going down here to the 618, maybe we're going further. We don't know. I mean, here's our wave 1 high. Right, as long as we stay above that, we've still got a valid count. We can look here and say, okay, well, maybe if we came back the other way, well, maybe I want to pay attention to that. Well, here was the first one, 618 was perfect. Got through here. That's when it looked like we maybe had a 1-2 and we were going off. We were going off to new highs, and then now we've had this. So, it doesn't always work out. So here we come back. Now look here. There's right in the golden zone your negative 23.6. So the algos that sold it here didn't get their target. There definitely was some selling here. It's a little sloppy, but if you allow for this to be an ABC, which is the case, which this is where an Elliott trader has some advantage. So we get a 3-wave structure there. So you can certainly play this as it would play this way. So there's an ABC within your B wave, right? So on the larger degree, you'd have it this way. So from here, we'd have. So we'd have A, B, now some sort of C is going in here. Now let me change that degree so you can follow it. So let's go up to minor. Okay, so C down here, 4 down here, very possibly. So put that in, so where does that put us? 8,000, 9,000, right? That's, what was our high here? 20,000. We'd be more than a 50% retracement from zero to 20,000. Halfway's at 10. That's in between the two. Well, here's the 618 at 93. Call it 9,400. Very possible. Very, very possible. Right. So, but it doesn't. If that happens, people are going to be, all the naysayers, all the people that missed it, all the, Bitcoin's a scam, Bitcoin's a pyramid scheme, all of them, they're just going to be applauding as it goes down because that's sour grapes. Yeah, I told you it was not real. And they're justifying the fact that they didn't participate in all the wealth creation that happened here. But if it comes down here, I promise you, I'll be buying it there because that's what I see. Now let's look at risk reward. We come down there with that. The target doesn't change. Front run on the 618. We know the negative 23 is there. Now what do we have? That's just the first algo target, not a Elliott target. What's that? 14 to 1. I'm going to buy it there if it gets there. You know, I'm trying to see whether or not we're going to get a double bottom here that's going to hold. I don't know. It's hard to say. It looks to me like there's one more push down. Actually, when I get to the hourly, and I know I'm running long today, but this is worth looking at because this sets the tone for the market for all of crypto. Right? There are some winners across the board. I'm going to come back and do another one because there's always going to be a few coins that are moving higher against Bitcoin even on a day like this. So pay attention here. Whenever there's sell off like this, it creates opportunity. So let's just be conscious of that. Let this thing stabilize. Decide what time frame you want to trade on. Recognize that there could be a very interesting opportunity down here. Just so that we're thorough, right? We always want to look for some market geometry. So let's just work from that A to that B. It's not quite there. Let's change that. Let's go to an alternate. See if we get anything more interesting there. Well, we'd have the lower parallel there, modified shift. Not a lot of health there. So I'd start looking for, on different time frames. I might look at that and say, okay, here was one that I saw this morning that it's worth paying attention to. I draw them all. So you can work from all of these pivots and look for what the market is responding to. So you could draw from this A to the B. Here, no, we're going to go back to original. That's a little silly. So we'll go back to original there. That caught my eye. So we're tapping it right now. So we're working from the A to the B to the C, right? So that caught my eye. So potentially you have some market structure and some geometry here supporting this 50. If we're going to go down, do we go straight down here and we go looking for the lower parallel, or are we going to work our way down along the median line? So those are things to pay attention to. So no reason to be panicking here. There's no reason to think that Bitcoin ultimately in the crypto sphere, that it's all imploding here. I think we're long past that point. If you follow me, it's what is the price telling you? What is it telling you? All right, I've been long-winded today, so I'm going to stop it right there, and I'll be back with something else later.